I sat down with Chairman and CEO Dirk Van de Put to go through the numbers. Here's what he said about the outlook.
First thing you need to look at is the volume mix underlying, which we think is going to be positive in 2024. But there is a lot less pricing. You have to take into account that last year we took quite a bit of pricing. We have to take pricing again because cocoa prices, sugar prices, hazelnut prices are going up again. But at the same time, the pricing effect into next year will be less. But the underlying volume mix performance, which is really how much the consumer is buying, is going to be pretty good going forward.
You also say that there's greater than usual volatility as a result of geopolitical uncertainty. You have a unique vantage point of the emerging markets world, of the rest of the world, more global than most U.S. companies. How do you see the geopolitical uncertainty and volatility impacting consumers?
Well, in the first place, we're thinking about the Middle East, where there's clearly a skepticism about Western and North American products. And we see the consumer pulling back a little bit, probably affected our EMEA region volume by 1 to 1.5%. We think that will continue in the first half of next year. We assume in the second half of next year that will be a lot less. And the other one, I would say, there's a number of countries now around the world where there have been quite big devaluations. Argentina in the first place, but we have Nigeria, we have Egypt, we have Morocco. So we see a number of countries where the consumer is heavily affected by the economical conditions, and that is going to be reflected in their consumption.
You mentioned the inflationary costs, which are still there, in particular cocoa. So how are you planning to deal with that if you can't have the same kind of price increases that we've seen?
Well, in chocolate, we are going to go with the price increases that we need to take, and we're in the middle of the negotiations of that. Happy to report that in North America, those price increases have been agreed. In Europe, the price negotiations are still going on, but I would say the majority of it is already done. And then in emerging markets, we do not tend to increase our prices much. We tend to play more on mix and keep the price points, which are really important for the consumer there. So I do think that, particularly in chocolate, the price increases will pass. In biscuits, there's going to be a lot less pricing that we take, and that's the effect I was talking about that you will see in the top line. That's why the top line is coming down a little bit compared to this year.
What about the GLP-1 debate? It certainly has died down since we last talked about it a few months ago. But now that you're getting to see some early data and trends, I wonder how you think about how it influences your portfolio and your future.
Yeah, our view has not really changed. The penetration of the drug, i.e. the number of consumers that are on the drug, is exactly in line with the projections, even a little bit less, I would say. And so if you extrapolate that for the next 10 years and you assume that 5 to 10% of the U.S. adult population will be on this drug, as an example, the calorie effect of the calorie intake is going to be 1 to 3%. So if we look at all that for us, we think that our volume 10 years down the road might be affected by 1 to 1.5%. And to be honest, at the moment, that is sort of our margin of error of our estimates where we will be. So nothing has really changed. We have more data which have confirmed the assumptions that the effect is not going to be that dramatic as was originally assumed, and it's going to be quite mitigated, in fact.
Given all of these factors, Dirk, wondering how you think about your portfolio. You've been pretty acquisitive over the last, few years or so. How do you feel about it now, and do you feel like you're going to continue at this pace given the current M&A landscape?
Well, yes, we want to continue. I would say, contradictory to what you would believe, the valuation of companies have gone up, which doesn't make sense with the high interest rates. But I think there is more interest, maybe a little bit more need from other companies to make acquisitions. So we're going to stay financially very disciplined. We don't want to do acquisitions that we cannot get a very good return on. So discipline is the first thing I would say. But yes, we are looking around the world. Is there anything in the biscuits and the chocolate arena that is of interest to us? But I would say the environment is more difficult than it was. So you might see a little bit less activity from our side.